Hey, everybody. Welcome to our real estate uh, webinar tonight on getting started in the real estate business as an investor. I've started a little real estate group on Facebook, just kind of a private group for some friends of mine that are interested in getting started in the real estate business. And um, and so I thought what I would do is just put together a couple of simple training videos, a couple of meetup groups as we go along here online and just kind of answer some questions and go through the basics of how to get started in the real estate investing business and cover some topics that you may not think about every day if you're not real familiar with the real estate investing side of things. So we're going to go over some of those things this evening. I want to keep the our meeting here to about 30 or 35 minutes or so. And I'm recording the meeting so I can put it in the Facebook group. And then I may also put it on YouTube as well. So as we get started here, just a little bit about me. So my name's Nathan Soliday. I live in Southern Indiana, and I've been a real estate investor or doing different things in real estate for the past 27 years. So basically, I got my real estate license in 1997 and have been doing some sort of either real estate or financing, different things along those lines ever since then. So I'm definitely getting old, that's for sure. So over that time, like I said, I got my license back in 1997. It was actually in October of 97 is whenever I had to take the test for the second time. I didn't pass it the first time. So I took it the second time and passed it just a few weeks before my oldest daughter was born. And I knew I needed to do something extra, more than the job that I had at the time. I had a job at a local factory, and I knew that wasn't going to be enough to support a family of three. So went ahead and got my real estate license. I thought that'd be a great idea, and it took a while to get things going. So I passed my test on my second try back in '97, and I think I might have closed maybe two deals the first year, part time, but it was enough to let me know that hey, this is something that I'm definitely interested in. I want to pursue further, and so that's what I did, and that's kind of how I got started. It wasn't too long after I got my license that I bought my first investment property. So I knew that with my dad in construction, that I wanted to kind of do something maybe in the fix and flip area, or some kind of rental property, but I didn't know what. And so a friend of mine that was doing real estate, he had his license with me at the same brokerage that I was at. He had an eightplex property in a neighboring town, and we were talking about it a little bit. And I knew it needed some work, but I also saw that it had some really good rental income potential. So I kind of ignored the work that needed done on the house, and I jumped in, and bought the property. I was able to get it with owner financing with $15,000 down, and but it ended up being a very rough property to have, and it was a tough one to manage. And we'll talk about that and at some different parts, maybe not tonight, but I may do a another meeting to where I go over some just examples of some deals that I've done in the past, and that was not one to start my career off the right way. So anyway, but there's so many different things and different areas of real estate that you can do if you're thinking about getting in the business, and we're going to talk about a lot of those tonight. So since that time, I've done a lot of different types of real estate deals, whether it's the fix up and rehab properties, Airbnb type properties, rental properties, and you name it. I've done quite a bit of different things on those, and some of them have worked out really well, and some of them didn't. So it's part of the process of learning, what works best for you and what you're best suited for. I'm also currently a real estate agent and also do mortgages. So I do mortgage lending, and I do lending on real estate investment properties. We'll talk about some of the different financing options here in just a little while in this meeting as well. So let's get started with the actual course for tonight. And when we think about that, why would you want to consider real estate investing? And when we think about some different reasons of why it may be a good idea to do that, one of the main ones that everybody talks about is the ability to generate extra income, whether it's passive income to where you've got a rental property that kind of takes very little work every month and you get income from that, or whether you're trying to replace your current full-time income and build up a nice monthly income to replace your job, or even to make enough to offset what maybe a part-time job could do for you. So passive income and income generation is one of the biggest parts of that. But also another reason to consider real estate investing is property appreciation. If you're not sure what appreciation is, basically that is when you buy a property for X amount of dollars, but then next year it's worth a little more than that. Property value goes up a little, and then the next year a little more than that. So the longer you can hold a property, most of the time it's going to appreciate. Now the market, over the past 100 years, obviously has had some ups and downs, but for the most part, property appreciation and goes up in value. Especially since 2020 and COVID, there's been some really large appreciation amounts for some properties in our area and probably wherever you are as well. So, for example, in our area, for the most part over the past 20 years, the average appreciation rate was 2 to 3% per year. So that means if you owned a house that was worth $200,000 in 2010, in 2011 it was probably worth $206,000, and then 2 to 3% every year that you could kind of tack on to that. But recently in our area, some of the appreciation rates have been as much as 10 or 20% since COVID because of a lack of housing inventory, and because of just the way the market is right now. We've got a lot of people moving in to our area. There's a lot of jobs and good jobs that are coming into our area. So it's our population is growing, which it hadn't really done in Southern Indiana for several years before that, but it's starting to see that boom over the past 5 to 7 years. Your area may be a little more consistent, but there also may be some good appreciation rates in your area too. But that's another reason why a lot of people consider real estate investing is they can buy a property and you buy it today, within in 3 years it may be worth 30% more than what it is when you buy it, which is a nice bonus. Also tax benefits and depreciation. So when you think about depreciation, we're talking about it from a tax standpoint. It's just the opposite of appreciation, but there's a little different way to look at it here when we're talking about taxes. So you can actually depreciate part of the value of your property every year off, and basically it works like a tax deduction off of your taxes. And so it can cause your tax amount to be a little less possibly if you own a rental property. There's also some different types of tax benefits that can go along with that too. You can actually offset your mortgage interest that you pay. You can actually take off any from a tax standpoint. You can take off any repairs that you do to a property and things like that. So there's a lot that you can do from a tax standpoint that can make it well worth owning a property and doing that. So tax benefits, tax depreciation on a house, and those are a couple of great other reasons to have a rental property. Long-term wealth is another great reason to consider real estate investing. Some people will just simply buy one house. They'll buy their primary residence, they'll live in it, and they'll decide to buy one rental property and keep it for 20 or 30 years and basically just pay that down every month. They'll take the rent, apply that towards the mortgage, and then after 30 years, they've got a paid off house. Now, obviously they could pay it off before that. You can pay a little extra. You could do a 20-year loan or a 15. But as an example, it's a good way to build long-term wealth, and it can be done with just one house, especially when you think about the appreciation side of it and the fact that the renter is paying down the mortgage that you have to where you can own a free and clear house in 15, 20, 25 years, whatever that may be. So long-term wealth can be a great way to build up that option, when you retire, but also portfolio diversification it can go right along with that. So maybe you have a 401k or you have some stocks that you invest in regularly. If you want to do something a little different, you want to make sure you've got, everything great, when the stock market's going well, but you also want to tap into, to something else and diversify your investments and, maybe buy some real estate to kind of balance out your portfolio in case there's some kind of, stock market crash or something like that, like happened in 2008, 2009. that happened with, not only the stock market, but there was also a housing crash at that time too. But it's still kind of a good way to balance those things out and, and kind of have that diversification. And there's a lot of other reasons that you may have that you might, maybe why you are considering investing in real estate. And everybody just has a little different viewpoint on why they want to get into real estate investing. And so you may have a different, idea than that. If you do, feel free to put it in the chat box of why you would like to get involved in real estate investing. So as we think about real estate investing, the question is real estate investing as easy as it looks? We see people on Facebook putting their flip properties up on Facebook. Hey, we just finished this property and it looks like this great, beautiful property. But they don't really show what went into getting the house to that standpoint, So is it as easy as it looks? Is it simple? Do a few steps and see what happens. But I'm going to say no, it's not as easy as it looks. A lot of guys will make it look really easy to get going. They've got a portfolio of real estate, rental houses, and they've got 20 houses. It's not quite as easy as that. They didn't just start with 20 houses. They've had to work their way up to that in most cases. And there's a lot of challenges that can go with real estate investing side of things. And when you think about that, we've got tenants. You want to make sure you've got good tenants. If you don't, then you're going to spend a lot of your time trying to collect rent, trying to worry about evictions and going to small claims court. That's not the fun part of real estate. When you think about that, you also have to deal with contractors. Saw a post on Facebook today that a friend of mine had hired a contractor, and contractor didn't do what he said he was going to do. So now, my friend was having to subcontract out some more work to other guys, which when that happens, it starts to kind of blow up the budget. I had that happen to me a couple of years ago. I had a guy that came as a really good referral from somebody that I knew. I think the job was going to be maybe $13,000, and he wanted half of it up front. So I paid him $6,000 to get started, and he got started. He did what he was supposed to do to get started, and he was making good progress. And then he said, "Hey, can I get 3,000 more?" And that wasn't really our agreement. We were going to do 50% up front and then 50% at the end. But he had done a good job, and again, I'd gotten to know him a little bit, so I went ahead and paid him another $3,000. And then he never came back to the property, never came back to the job site. So not only was I out the $3,000, I still had to hire somebody else to do the rest of the work and finish it. So it slowed down my, my time frame to get things done. It blew up my budget for what I was trying to do there, and I still haven't heard from the guy to this day. So I hope he's still alive, but I don't know if he is, because he pretty well disappeared on us. Some other things to talk about or think about when it comes to real estate investing is you want to always check out your city and county regulations. Those things can come into play a lot when you're thinking about some short-term rental properties, but they can also come into play when you're thinking about trying to do some fix-up properties as well, because you want to make sure you get all your permits in place. You want to make sure that your contractors are licensed according to what the city or county requires. So there's a lot of things that go into that as well. You also have a risk of vacancy. So you've got a vacancy factor that we'll talk about a little more in a few minutes. But you want to make sure if you're going to buy a rental property, for example, whether it's 1 unit or 4 units, you want to plan on having some vacancy every year. Most likely that property is not going to be completely full all the time. Okay, it's a good chance that you're going to have 30 days, 60 days, 90 days where it's nobody's in there. So, for example, maybe you had a tenant and you couldn't collect rent for a month, then you had to evict them, whatever the case may be. Then you had to fix it up. It doesn't take long for 2 to 3 months to pass where you haven't had any income on that property while you're trying to get it ready to go again. So that vacancy factor is something you want to keep in mind, and make sure you always have an emergency fund in place when you're thinking about an investment property, just for situations like that. So you have enough in the bank to cover any shortfalls like that that may come into play. Also holding time. So you want to think about if you're doing a flip property, for example, a rehab property. You want to really take into consideration how long it's going to take you to get the work done on the property, how long it's going to take you to once the house is done, to get it sold. So you want to kind of have a good plan of how long it's going to take to do that, and then you want to add some time to it because it's never going to go exactly like you think it's going to go when you're working on any kind of real estate deal. So always kind of plan for the worst and work hard for the best in that way. Financing challenges. Every property is a little different when it comes to buying it, and different financing options that you may have. So we're going to talk about some financing options on the last slide here in just a few minutes. But that's something to keep in mind as well. So financing challenges can be something. Property maintenance, if you own a property, anything can happen when it comes to having an issue with the property. So you may have a water heater go out, or you may have a furnace that goes bad in the middle of winter. Again, you want to make sure you have a little extra money set aside for property maintenance and things like that, because again, you can have some challenges when it comes to your investment that you have. Cash flow management, again, that just goes along with, with basically having that plan in place to where you've got enough money from the rent to be able to cover what your mortgage payment is. You've got enough money in that rent to cover your taxes, to cover your insurance, and again, to cover any maintenance challenges that you may have. So again, that's something to think about. And then property management. So you want to kind of have a game plan in mind of, ask yourself, am I cut out to be a property manager? Am I the one that wants to collect rent? Am I the one that wants to take people to, small claims court? You always hope that doesn't happen, but it will happen if you have rental property long enough. Are you comfortable with doing that, or do you need to hire a property manager to do that? So that's some other things to think about. There's other challenges as well. Real estate investing is not as easy as it looks, trust me, but it is manageable. With a solid game plan, you can, accomplish all those things. You just want to make sure that you're prepared for it, up front when you get started, in the business. So now I want to cover some different types of real estate investing. I mentioned at the first of the video, I've done a lot of different types, and some of these I've done, some of them I haven't, but everybody, when you're thinking about getting into, any kind of investing like this, you want to think about what best fits your style. Like, what are you comfortable with? What part of real estate do you want to do? And it may take you a little while to figure that out. You may do rental properties, decide it's not for you, and you may decide, or you may want to do a flip property, decide it's not for you. So you may need to try a few things just to see what works. But it's good to kind of zoom in and focus on one or two of these segments that you like the best. So residential rental property that we talked about, multifamily rental property. So, 8 to 10, 12, 20 units, whatever it may be. It's a little different, ball game when you're thinking about, several units like that compared to just a residential rental property. With multifamily like that, that can get into some commercial financing and commercial lending and things along those lines. Fix and flip projects. So that's what I really like to do currently. So fix and flip is if you find a house that needs some work, you get it fixed up, turn it around and sell. And if you have a good budget and a good game plan, like we talked about earlier, it can be a great option for you. But again, you always want to plan worst case scenario. You never know what could happen or what could come up during that flip. You may think you have all your bases covered when you buy the property, and next thing you know, you've got to change some floor joist, or there may be some unexpected mold issues that you didn't know about. So it can definitely be a great option, but if you're doing the fix and flip, be prepared for some surprises because they can happen. Vacation properties are a great idea. A lot of people on their first real estate investment that they make, they buy a beach house, in Florida, or near a lake, or, a cabin in the mountains or whatever it may be. And if you mix that in with some short-term rental options with Airbnb or VRBO or whatever program you want to use, that income from the short-term rental property can offset you having a vacation property that you can use from time to time. You'll want to check again with your tax advisor on how many days you can use that property and still be able to classify it as as a rental, a short-term rental property with your tax returns. But still, it can be a great way to offset that dream of actually having that beach house, in Florida. So anyway, some things to think about there. You got the commercial rental option, to where if you get into commercial property, to where maybe you have a large commercial building that you rent out to a store or to an industrial facility or something like that. There's so many different, areas of real estate that you can do with that. And same with an office building. You might want to buy an office building and rent out different segments of it. I know a friend of mine that has his main focus in real estate is actually medical office buildings. And so that's the only thing he buys. He used to do regular rental properties. He got into motels and hotels for a while, but he realized that medical office buildings was the main thing that he wanted to do. And he's focused on that, and he's jumped on that. So anyway, so he's done that as well. Along with that too, storage units. So storage units can be one of the easiest ways to get started in the real estate business. It can be a low cost way to get started, depending on how many units you use. But it can be a great option to get started as well. Land development, if you've got some land and you're thinking about, maybe subdividing that land into some a small subdivision for new construction, or again, putting some storage units on that, it can be a great option for that as well. New construction, spec homes, again, can be a great option. The nice thing about those is, you can still make, a profit on that house, similar to the fix and flip project, but you should have fewer surprises on the new construction. So you may not make quite as much money on that property or that project, but it may be a little more streamlined than doing the fix and flip. So it's something to think about as well. The last two I wanted to cover on the different types of real estate investing are two that maybe you've never heard of before. One of them is called wholesaling. What a lot of beginning investors will do is maybe they don't have the resources to do all of these up here. They'll get started with wholesaling, and what that is they'll find a property that a seller is wanting to sell, and I'm just going to say use $100,000 as an example. So they'll find a seller that wants to sell a house for $100,000, but maybe the wholesaler knows somebody that would buy it for $120,000. So what they'll do is enter into a wholesale contract with the seller and say, hey, I'm going to give you your $100,000 in the next 60 days. If you agree to allowing me to make a little profit of anything I make up and above that 100,000. Wholesaling can be a great way to get started. It's kind of looked at as something that's kind of a shady process by some investors. And it can be if you do not communicate with your seller the way that you need to. If the seller doesn't know that you're wholesaling the property and they think you're the one that's going to be buying it, or if you mislead them in some way, then yes, it could be it could turn into a bad situation pretty quickly. But if you're upfront with them and you explain everything about the process, and they know your goal is to make a profit and their goal is to get what they had asked for the property, then it can be a great option to get started. So wholesaling can be a good thing to get going. And then one that doesn't cost any money is bird dogging. So bird dogging is a great phrase. It's something that a lot of beginners will get started with. Basically, they'll drive, a bird dog will drive around neighborhoods and find vacant houses that are available. And then they will call an investor that they know and say, hey, I've found this house that's for sale, or that's vacant. You might want to check on it. And if you buy it, give me $1,500, or something like that. So they'll go out and find a deal that's not on the MLS or not on the market. And then what they'll do is, basically refer that out to an investor for a referral fee. And we do that. So if you ever find a house in our area that you think I might be interested in as an investor, let me know, send it to me. And if it's something that we buy, then I'll definitely give you a referral fee for that. And the referral fees can be anywhere from $500 to $2,500, depending on the project. It's something that we would work out, ahead of time. But being a bird dog for real estate is a great thing to get started, and it doesn't cost you any money. It just takes some time and some legwork to find some deals. And there's other options as well. So anyway, so that's what we've got as far as some different types of real estate investing. Top 10 things to consider when buying a rental is the location. You want to make sure it's in a location that may be appreciating quickly, maybe an area that's growing. So you want to consider that. You want to consider the condition of the property. Is it one that that you're going to have to put a lot of work into before you can rent it or before you can sell it? All those things are fine. You just want to be prepared ahead of time. You want to check out what the current rental income is on the property, but more importantly, what the projected income potential for that property is. So maybe it's a house you can buy and the rental income is, let's say $1,000 a month, but if you do X, Y, and Z upgrades, maybe you can get $1,500 a month on the rental on that. So maybe you have a really good potential that you can, that you can raise the rents in that situation. Again, you want to keep in mind the vacancy rates that we talked about, and then also operating expenses that we talked about earlier. With the operating expenses, that can be anything from property taxes, homeowners insurance, utilities that you have to pay, any maintenance that you have to do, and and all those things. If you hire a property manager, you have to work all that into your expenses. So definitely some things to think about when you're thinking about buying a rental property. Who's going to manage the property, like we talked about earlier, and then also that cash flow factor, and then the ROI, so the return on investment. Return on investment is if you're going to put $50,000 into a house, figure out what you want to make on that investment. Do you want that to be a short-term investment where you make $25,000 in addition to that? Or are you looking long-term and what your ROI is going to be on that? And then same along those lines too, your exit strategy. How long do you want to own this property? Is it going to be one that you're going to own for six months, 2 years, 30 years? Just kind of have a strategy of what you want to do and have that kind of work into your game plan early on. As we kind of finish up the call tonight, you also want to kind of think about, how am I going to buy my first rental property? You don't always just have to have full cash to buy a rental property. In fact, you don't really need that anytime because there's a lot of different ways that you can buy a property in that way. So the first one is cash. If you've got the money saved up to pay cash for an investment property, maybe that's a good idea, but maybe it's not. It may not be a good idea to use all of your money to buy one property and then you're kind of stuck. It depends on your goals of what you want to do in the long term as far as how you want to continue your real estate investing with that. So cash is great. You always hear the phrase cash is king, but you may not want to use all of your money at one time if you have some. Let's say you don't have any money, or you have some money, but you want to do owner financing. That can be a great way to buy a property. Somebody may be selling a house, but that seller may not need all their money now, and they may be willing to take payments on that for a few years. So owner financing can be a great way to go. A mortgage with your favorite lender. So I know a great lender if you could use if you ever need a mortgage, but whoever you use with a mortgage, they can have some different options as far as buying that property. One of the basic, most common ways to buy a rental property is just with a conventional loan with 20% down. It's pretty standard. Almost every bank or lender offers that. But with that, you have to have some pretty good credit. You have to have some good income to offset your mortgage that you're going to be having, your new mortgage, but also to offset any debts that you have. So it may be hard to qualify for that depending on how your taxes and income show at the end of the year. So maybe that's not the best option for you, even if you have the 20% down. Maybe it's a private lender or a hard money lender, somebody that's willing to, to give you a loan, but not go through all the hoops of a conventional loan. Now, if you use a private lender or a hard money lender, you're probably going to pay more. It's going to be an expensive loan, but it could allow you to get the property, get everything set like you want, and then refinance it later. I do know a hard money lender that may work for you. So if you're thinking about buying any type of property, but you haven't been able to qualify for it, let me know. I may be able to get a hard money lender option for you, which means, okay, your credit's not quite good enough to qualify, or your income's not quite good enough, but this investor looks at the equity in the property, and that's the main thing for them. So if there's a lot of good equity there and they've got some good security, then there may be a way to get a private loan in that way. You may be able to combine a conventional loan with 20% down with a retirement fund. So you could take out of your 401k, use some of that money for your down payment, and then do a conventional loan with that. You could also do that with a home equity line of credit. And that can be a great option as well. You could tap into some equity that you have in your current house and use that for your down payment on on the conventional loan that you're doing. And then one program that is getting really popular, it's gaining a lot of momentum right now, is the DSCR program. And it's great for buying a property of 1 to 4 units. You can use it for larger properties, but for 1 to 4 units, you could use that, and it's based on just the income for the property. So basically, if the income from the property is enough to cover the mortgage and the taxes and insurance on that property, in some cases, sometimes it's just the mortgage itself, plus a little extra, then you may be able to use the DSCR program, and the lender won't even need to look at your tax returns or your W-2s or anything like that. It's based on the lease agreements on that property. If you have any questions on that program, let me know. It's great. You can also use that to refinance a property as well. So keep that in mind. So all of those things are great ways to purchase your first, rental property or first investment property. But don't just limit your thinking in that you have to have 20% down to buy a property, or you have to have an 800 credit score. There's alternative ways to be able to buy things like that. That could be a good option for you. So thanks for watching the video tonight. Thank you for jumping on here. And if you ever have any questions at all, or if you have a project that you'd like to, think about maybe buying, or maybe you have an investment property that you're wanting to refinance, reach out to me. You can text me at the number below, 812-620-0046, or you can find me on Facebook. Message me with any questions that you have. I'd love to help with any of those questions. And, maybe we can help you get started in the real estate investing business. So thanks for joining. Look forward to talking to you. And again, if you ever have any questions at all, feel free to reach out to me and we'll go from there. All right. Thanks. Have a great night.